In this section, we will look at the Indian stocks. So this is chart number 21, Reliance daily time frame. Question 1. Which 4 patterns does this candle complete? So this candle is completing 4 different patterns. You have to name them. Number 2. This candle achieves 2 objectives. What are those objectives? This red candle. Number 3. Is this candle a star and why? So this green candle. Number 4. Give 2 reasons why this is not an ideal piercing pattern. So these 2. Number 5. What are these 2 doji signaling? So this one and this one. Number 6. Why would this candle not get you excited? So this one. Number 7. Does the close of this candle complete a falling window and why? So this high wave candle. So question 1, which 4 patterns does this candle complete? So this candle first it's a doji candle, right? Second, it's a bear harami cross. Third, it is a shooting star, and fourth, it's a doji coming after a tall green candle or a tall white candle, which by the way becomes resistance. So those are the 4 patterns that this candle is completing. One is a doji candle, second is a shooting star, third it's a bear harami cross, and fourth it's a doji after a tall white candle. So those are the 4 patterns. Number 2, this candle achieves 2 objectives. What are they? First objective is completing a falling window. Second, it's breaking this support level. Number 3, is this candle a star and why? Yes, of course, this candle is a star. It is also a hanging man. The reason it is a star is because it gaps away from the prior candle and it's occurring at a top. Number 4, give 2 reasons why this is not an ideal piercing pattern. 2 reasons. First reason is, for ideal piercing pattern, the open of this candle should be below the low of the prior candle. That is one reason it is not an ideal piercing pattern. The second reason is, for a piercing pattern should come after a proper downtrend. Here, a couple of candles does not constitute a proper downtrend. Number 5, what are these 2 doji candles signaling? Well, these 2 doji candles are signaling indecision and confusion in the market. They are signaling that the prior uptrend is likely to end. Remember, when the candles signal that the prior uptrend is likely to end, it doesn't mean that the market price will crash like this. It will not be like a inverted V. It is, the price may consolidate and then start to fall, which is what has happened here. Number 6, why would this candle not get you excited? Well, this candle looks like a shooting star, right? Because here it's coming after a uptrend. However, if you closely observe, you see a box range getting developed here. So a shooting star like candle in a box range, that doesn't excite me much. And this body is also not coming near the top. If you look at this candle or these 2 candles, they are coming near the top, right? But this, already the price downfall has started. So that's why this candle would not get me very excited. Number 7, does the close of this candle complete a falling window and why? Well, this falling window is completed by these 2 candles, right? This candle and this candle. What does this candle got to do with the falling window? Nothing. So this does not, the close of this candle does not complete the falling window. In fact, it is testing the resistance of the falling window successfully. So this is chart number 22, TCS weekly time frame. Question 1, is that a tweezer stop and why? So these 2 candles. Number 2, is that a tweezer's bottom? Why? So these 2 candles. Number 3, would you buy on this candle and why? So this green candle. Number 4, why would you not be surprised to see two shooting stars here? So this one and this one. Number 5, which one of these shooting stars would you go short on? Why not the other? So again, these two shooting stars. Number 6, why is the price stuck near 640 here? You see the price is stuck here. Number 7, does this candle complete a harami pattern and why? So this one. So question 1, is that a tweezer stop and why? Well, both the candles have the same high. However, for a tweezer stop, you need the first candle to be tall, which in this case is true. But you need the second candle to be a small candle. That's the ideal tweezer stop. So since both of these candles are having the same high, I would call it as a variation of a tweezer stop. Number 2, is that a tweezer's bottom and why? Well, for a tweezer's bottom, ideally you want the first candle to be a tall candle, which in this case is true, but the shadow is also a bit on the higher side. We want the a smaller lower shadow, okay? So in this case, both these candles have almost the same low, plus this a weekly chart, right? So I would call it again a variation of a tweezer's bottom, not a perfect tweezer's bottom. Number 3, would you buy on this candle and why? Well, this candle completes a variation of a bullish engulfing pattern. However, it still doesn't confirm this. It still hasn't tested this low. So that is the reason why I would not buy on that candle. Number 4, why would you not be surprised to see two shooting stars here? So there are two shooting stars here. I would not be surprised to see that because you see this a doji coming after a tall white candle becomes what? A doji coming after a tall white candle becomes resistance. And that's exactly where you have the two shooting stars. Number 5, which one of these shooting stars would you go short on and why not the other? Well, I would go short on this shooting star and not this one because this shooting star doesn't confirm the resistance created by this bearish engulfing pattern. This shooting star does. So if I draw a line, so this is a successful test. This is not a successful test. So I would be comfortable going short on this candle, not on this candle. Number 6, why is the price stuck near 640 level here? Well, the answer is very easy. You see a bearish engulfing pattern here. That tweezer's up variation of a tweezer stop that has become resistance. That is why the price seems to be stuck at that level. Number 7, does this candle complete a harami pattern and why? Well, no, this candle does not complete a bear harami. The simple reason is the height of the second candle real body is not less than 20 to 25% of the height of the prior green real body. So this is chart number 23, HDFC Bank, daily. Question 1, why is this candle not an ideal star and what does it indicate? So this red candle. Number 2, does this candle complete a piercing pattern and why? So this green candle. Number 3, this candle breaks prior resistance with a rising window. Why would you still not buy on this candle? So again this one. Number 4, does this candle break prior resistance and why? So this red candle. Number 5, which candle breaks this window? So you have a rising window here. Number 6, is that a strong opening price and why? So you look at the opening price of this green candle. And number 7, is that a hammer? Why? So this candle. Why is this candle not an ideal star? What does it indicate? The reason why this is not an ideal star is because for a star pattern, the bodies of the two candles, the prior candle and that star candle, the bodies of the two candles should not overlap, which in this case is true. However, the shadows should overlap. But in this case, you have a rising window. That is the reason why it is not an ideal star. It is a star but not an ideal star. And what does it indicate? It indicates indecision in the market. So the bears are not allowing the price to go up in spite of the fact that there is a rising window here. Number 2, does this candle complete a piercing pattern and why? No, this candle does not complete a piercing pattern because for a piercing pattern, the first candle should be a tall black or red candle, which in this case is not true. Number 3, this candle breaks prior resistance with a rising window. So this resistance has been broken with a rising window. Why would you still not buy on this candle? Well, I would not buy on that candle because it's a star, right? On a star, you are not supposed to initiate a new position. Number 4, does this candle break prior resistance and why? So where is the prior resistance? The prior resistance is at the shooting star. Is that resistance broken? No. It has been crossed, but it has not been broken. For a break, you need a close. This red candle has closed below that resistance. So it has not broken prior resistance. Okay? Number 5, which candle breaks this window? So if we look at this rising window, you draw a line here. Like this. So this white candle, it doesn't break the window. It opens below the window but closes back above it. So in fact, it is respecting the window. So it is this red candle that is actually breaking that window. Number 6, is that a strong opening price and why? For this candle, this is not a strong opening price. For a strong opening price, the opening should be above the midpoint of the prior black candle. That's a strong opening. Number 7, is that a hammer? Why? No, it's not a hammer because we would have wanted the lower shadow to be slightly taller than it is here. It seems to be exactly twice the height of the real body. If this would have been slightly like this, then we would have called it a proper hammer. So this is chart number 24, ICICI Bank weekly time frame. Question 1. Is that high wave candle significant in the context of this chart and why? So this one. What is the problem with buying on this candle? So this green candle. What could you do to solve the problem of buying on this candle? So again, this green candle. Number 4. Does this high wave candle confirm prior support? So again, the same candle. Number 5. If you went short on this shooting star, your stop loss was hit in a couple of weeks. Does it mean it was a bad trade? So this shooting star. Is that a dragonfly doji and why? So this little candle. Number 7. What is the implication of this bullish belt hold line? So again, this green candle. Is that high wave candle significant in the context of this chart and why? The answer is yes, because the high wave candle confirms the resistance created by this shooting star. That's one. And second, if you closely observe the price movement on this chart, you see a channel developing here. So you see this here and this here. That's called a channel in Western technical analysis. And that candle touches both the lines of that channel and the channel remains intact, right? The channel has not been broken, okay? So if you observe the chart properly, you can spot that channel, and that high wave candle is touching the bands of the channel. So it's an important candle. One reason is this: the resistance is being respected and the channel is also respected. Number 2, what is the problem with buying on this candle? The problem with buying on this bullish engulfing pattern is the reward to risk ratio. By the time the pattern gets completed, the price has already moved up significantly. What could you do to solve the problem of buying on this candle? So if you want to buy on this candle, the best thing to do is to draw the Fibonacci level. So this would be your 100% level, and this would be your 0% level. And then you buy at maybe 50%, put a limit order at the 50%, or put a limit order at the 61.8%, and then look to ride the market up. I think the 61.8% level was touched, so your order would have been filled on this candle. The 50% level doesn't seem to have attained by the price. So one way to solve the problem of buying on that candle is by using the Fibonacci levels. Number 4, does this high wave candle confirm prior support? Yes, you look at this candle, opens near the low, or the open and the low is the same and closes near the high. So this candle satisfies our criteria of a long white or green real body. And when that happens, the low of that candle becomes support. So if I draw a line here, that support has been respected by this high wave candle. It's confirmed, that support is confirmed by that high wave candle. If you went short on this shooting star, so this one, your stop loss was hit in a couple of weeks. So 1, 2, so this is a weekly chart, right? Within a week, your stop loss was hit. Does it mean it was a bad trade? Does this mean that you took a bad trade? The answer is no, because see, there was a resistance here, and the price went down, then it came up, and the shooting star respected that resistance, right? And this candle is almost a doji. So whenever you have a doji after a tall white or green candle, the high of that pattern becomes resistance, most likely to become resistance. So in this case, the shooting star is confirming that resistance. And if you would have taken the trade, your stop loss target would have been somewhere here or maybe here. That was a good twist to a reward to risk trade, so not a bad trade. Just because it hit your stop loss doesn't mean that it was a bad trade. Number 6, is that a dragonfly doji, and why? It is not a dragonfly doji because a dragonfly doji that does not have a upper shadow. Number 7, what is the implication of this bullish belt hold line? Well, that's a trick question, because although this candle looks like a bullish belt hold line, but the bullish belt hold line comes after a downtrend. In this case, it was not a downtrend. This little 3-4 candle, that is not considered to be a downtrend. A downtrend looks something like this. If this candle were somewhere over here, then we would call it as a bullish belt hold line. Okay, so this is chart number 25, Infosys daily time frame. Question 1, would you go short on this candle? Why? So this red candle, and by the way, on this chart, as you can see, I have added the RSI. So that's a hint. Number 2, would you go short on this candle, and why? So this particular green candle. Number 3, can you spot a false break on this chart? Remember, it's a break, not a breakout. Number 4, does this stop complete a negative divergence, and why? So you're looking at the RSI now. Number 5, what is the significance of these spinning tops? These spinning tops. Number 6, what is the significance of these spinning tops? Again, these. Number 7, is that a strong bullish? Is that a strong opening bullish engulfing pattern, and why? So you look at these two candles. You look at the opening price of this candle. Question 1. So, would you go short on this candle and why? So, let's look at this. This is a bearish engulfing pattern and it is confirming the resistance created by that shooting star, correct? Plus, if you look at the RSI level, I have drawn the RSI level here. It is above the 70 level, so it is an overbought level. So, a bearish engulfing pattern at the overbought condition of the RSI and confirming prior resistance created by the shooting star, I think that's a good trade. I would go short on that candle. Would you go short on this candle and why? On this candle, I would not go short because although it's a shooting star and there are overbought conditions, but it has to confirm some prior resistance. That would make me more comfortable. Number 3, can you spot a false breakout on this chart? Well, the answer is very simple. You simply draw a resistance line at the shooting star. Continue this line forward. That's a breakout. Sorry, that's a break. The candle breaks above that line, closes above it. So I would call it a breakout, not a break. Okay. Can you spot a false breakout on this chart? So that's a breakout, but it closes back below. So that's a falling off the roof kind of a scenario. So that's a false breakout on this chart. Number 4, does this top complete a negative divergence and why? So you have a top here, you have a top here. So the price is going up. And if you look at this top and this top is higher. So it's going up, right? So when price goes up and the RSI also goes up, that is not a divergence. So there is no negative divergence here. Number 5, what is the significance of these spinning tops? Okay. So you look at all these spinning tops. I don't give much significance to these spinning tops because it is appearing in a box range. What is the significance of these spinning tops? So these spinning tops, I give some value to it because the market is rising here, but it's rising very gradually and very cautiously. So these spinning tops are hinting that the trend is about to end soon, and surely that happened. After this, the price just went flat here. So these spinning tops are more important than these spinning tops that you see here. Number 7, is that a strong opening bullish engulfing pattern and why? Well, this is a strong opening because the opening is above the midpoint of the prior black candle. So it's a strong opening. However, it is not a bullish engulfing pattern because the bullish engulfing pattern comes after a downtrend.